The Quasimodo, which is also called the over and under, or QM for short, is the last execution patterns that we are going to take through. It's a reversal trade for most cases. You can sometimes see it as a continuation as well, which makes a really good continuation when you are in a established trend basically, and market is going to something like this, for example, where you have this kind of a failure of breakout in an established trend. So it's not always a reversal trend. You will find some examples of continuation. It's basically a failure to accept above or below a key level. Market proceeds to broke structure and retest the original level of SR. This is a similar thing as with the V reversals by themselves. You for a QM you really want to see this break of the structure because market can fail below this low but essentially hold this level here and continue. So once the market structure here is broken, you want to be then looking at the retest of this kind of a original level. The nuances of QM, you need to be aware of possible tree drives. This is something that can always happen, and this is where the kind of a long-term probabilities in trading comes in play. Market can make one more drive here, although you can see that here is a small tree drive into the high, so this is pretty good, but it will happen often. It happens to me often when I trade these. Market will just make one more drive higher, makes a failed swing at the high and then fails. So you need to be either bail on the trade or just re-enter if you get stopped out. You want to see pickup in participation at the failure point and also in the pullback. Okay, so this is your high volume or high delta. Market breaks the level, you have a increase of buying at the high, and there is a failure to hold it. Once market is pulling back into level, you have once again increased in participation to the upside. This tells you that obviously the buyers are trying to break the level back, but they are hitting the limit walls, and market will essentially sell from there. For swing trade, this is increase in volume for day trades. This can be spotted in the cumulative volume delta. I will show you this in the examples. Okay, so this is a kind of your swing time frame. This is once again a very nice example because you have a 3 drives, 3 upside. You have this kind of a failed swing here. What is this? You have this failed swing, at the third drive. You broke this level of prior resistance. You broke the market structure to the downside. You have a compression back to the level. So this is as perfect as it can be, basically. Okay, you have all these things lining up for you. It's not always going to be like this, so don't get too used to it, but this piece of market structure is really as clean as it can be. Another one, what I wanted to show you here is they are often the V reversals. You make a low, you break kind of any sort of a key level, and then you will make a key reversal from it. Once again, large pickup on selling into the level and then buying after that. This is your good low. You broke the structure to the upside, although there was a little bit of a struggle here, but essentially market tested this level, went basically to test this kind of a last, once again, the candle before the move. But overall you are looking at this prior level of support for your entry and move higher from there. Not for long, but you are playing a little more conservative targets with these QMs. I will talk about that in a bit. For this trade, since you have once again this sort of a compression, to here, this is good target to trade, but very often you will be kind of only taking these trades to this a prior high, basically. So somewhere into here. Once again, your environment here is telling you a little bit that you can run a trade for a bit. because you have this unfinished structure above, but when there is nothing, you are targeting the prior shoulder. This is here, I think, only by mistake. It's the same screenshot, so let's skip that. Bitcoin intraday chart. You can see that things get less and less clean on lower time frames, as they always do, but here you have these levels of resistance. Market breaks to that on a high delta, large pickup in participation. Then you're gonna get retest, and once again the buyers are stepping in, trying to really fade this level, but they essentially fail. As you can see, it's an intraday time frame. They fail for a little bit. Market is not going to sell off $10,000 from here, but only a couple $100 before continuing higher. So this is the intraday kind of expectation from a trade. Some examples in here. You have this one there. Okay, you break the level of support. Look at this high pickup in selling, basically down. You make a sharp reversal. You're just going to bid the level which is in correlation with a current daily value area high and yesterday point of control. Okay, so you gonna get bid here. They will squeeze you a little bit, but essentially it will go higher from there. Okay, also if you kind of pay attention, this is not anything insane, but you have this pickup in selling which kind of corresponds with, these are mostly equal, but the sellers really try to kind of step it a little bit here before the market move higher. But what is important is actually this thing right here. Okay, this kind of a huge market selling below the support, which just cannot sustain. We broke above it. You are playing the retest to the basically next high. Okay, this one is once again a double top here. So another example on a Bitcoin intraday chart, and this is those where is another factor of confluence in CVD, which actually I like even more, and it's a absorption on this kind of a entry level. So you have a level of support that gets taken out. Once again, this selling here is quite obvious, but look at what happens after that. We reclaim the level, so this is your structure broken, and then you are going to enter. You'll be using a limit order, so you are already in, but look at this. You have a much higher high, and delta is basically equal. A lot of selling came into here, but these sellers achieve nothing, and market will move higher from there. Okay, the executing of the trades, you are getting in on a retest of the level which was originally broken. So if I draw this without this insane arrow, just give me a second. This is your bearish version. This is your structure broken. This is your kind of a pickup in buying, either at the top or a lot of buying coming into here. And you are basically placing a limit order at this prior level of resistance. Obviously, for the other side, it's the same thing. You are placing your limit order right here before the continuation. Your stop loss is below or above the failure point. Like I said, there can be a 3 drive, which is annoying, but the stop loss here is extremely straightforward because you don't expect market to break this low. So your stop is without a doubt. The take profit is next potential level of reversal on the time frame where trade is executed. In a majority of cases, it will be this high here. Okay, because then you can make a 3 drive basically into here. So I very often with these things take profits at this kind of a first level where the pullback into QM started. If you have, once again, this is the kind of a thing that you need to be aware of the environment. If you have a compression coming down and there is this clean high, or if you have a double top here which is at prior week high, or if this QM, you know, took any kind of more significant level, then you can run a trade a little bit. But especially for these kind of intraday scalps, this is going to be your target. Stop loss is trailed based on a structure, as with every other trades, you know. For whatever you would run this trade, for example, here, you're gonna enter, we're gonna take this low here, make another QM, as you can see here. So if you would be, you know, for example, targeting this POC, then, you know, I would only move a structure, the stop after we take out this low and move to the target. So this is not the best one. Let me actually take a look. If, for example, this is, if you will target this high all the way up here, this is one of those things when you once again need to be aware of how much you are willing to give back. So I would aggressively trail my stop below these lows as we are getting closer to the target. I would much rather to basically get taken out if, for example, I am, because, you know, there is a compression here, there was not this kind of a stop run move, but if I would place my stop here on this move higher below this low, and then I would get taken out, you know, I'm getting in here and I would get taken out, and market would pull back all the way down here below this low, for example, and then do something like this, then I'm much rather not be in a trade at this point, you know, knowing that I didn't reach my full target but I got trailed out, instead of just sitting in a trade which does something like this, you know, pulls back too deep to my entry basically. So this is the thing I will be talking about in a risk management section. Here the market kind of went, so this is not the best example. Here the target got, you know, reached, but if you would, for example, if you would be trying to run this for whatever reason all the way up here, you know, you would basically enter here and then you would get most likely stopped out. This is one of those cases where when I talk about trailing a stop based on market structure, I want to see this, and even it can be a really tiny type of a stop run on a target where I took a trade. So if this is a 30-minute time frame, I want to see this 30-minute, and it can be just candle with a 1 wick basically, when, you know, market is going up, then it pulls back a little bit, takes out the prior low, moves higher. So from that point, let me do this again, I'm sorry, it's gonna go something like this basically. And if I entered the trade here, after this thing, I'm moving my stop into here, okay, because these are, you know, once again kind of a weak spots in price where market just can swing to them. So if you will be too aggressive, you might get taken out. Only exception for this is that when here is my target and I'm not willing to look at something like this, you know, I'm not willing to risk market going all the way back down when I'm really close to my exit. Okay, so this is what I mean by trailing stops based on a structure. Okay, so we have covered all three entry patterns that I use, and now what is there left is to talk about risk management, talk about how you will be preparing to trade, how you will be journaling the trades, and I will also give you sort of a frameworks for different types of time frames and, you know, different types of trading approaches. So let's go take a look at that.